Ninth straight night worth of strikes. This is the biggest round of escalation that we've seen since the peak of the war operations earlier this spring. I'm going to go to you, Peter, first for this. The geopolitical impact has been maybe dampened a little more incrementally as the weeks have gone by, but that's without this latest round of escalation and kinetic attacks. What exactly do you think this means for the markets overall? Should we worry?
I think we should start to worry. If this continues, the problem this time around is that we don't have the Strategic Petroleum Reserve to release right now. We're kind of at the lowest levels, so that was able to dampen a lot of the effects. Again, our view is at Academy Securities that this will still kind of settle down, that we'll get another, we haven't technically broken the ceasefire, though to all of slave people, it seems like we have broken a ceasefire. So I think it calms down, but if it doesn't, we're not going to be able to protect the price of oil the way we did the first go around because the Strategic Petroleum Reserve has been drained.
Are you seeing those same kinds of movements, price action that could determine whether or not you think there is more upside or that the risk has been underappreciated given what we've seen out of Iran?
Well, you look at this morning, we all saw the headlines, and again, thank you to the servicemen that obviously passed away. We appreciate everything you've done for your country there. Oil is lower right now, and I love what Peter said, to kind of build on that. I look at the calendar, I see August coming up. I mean, it is what it is. August in a midterm year, as you get closer to the election, you get some interesting things come out of the blue. I mean, the last couple August, look what's happened. We've had these out of the blue events. Dom, maybe it's up with the war. Maybe it's something else. I think investors just need to remember, especially in front of an election, you tend to get volatility, and sometimes it's out of the blue. So maybe that's something to be very, very aware of, and it very well could be energy. But again, I mean, crude lower this morning. I think that's surprising. Futures higher. Maybe it's surprising. Maybe not. This is what we've been seeing for a couple months now, though.
Now, Peter, versus that, the energy complex, is it still going to be something that you have to watch very closely because of it, the impact of those energy costs on these companies? The earnings season we're talking about right now is obviously in the past, but will they be talking about that more in these earnings calls going forward?
I think for most companies, it's going to be a second-order effect. I think the airlines, some of the big direct users, I think we want to watch whether it starts creeping up in agricultural prices. Having said that, I really want to invest in global energy. I think we've sold off. I think that's a mistake. And I really like some of the European names. I think BP, Shell. You're starting to see it. Even the UK Prime Minister, we're going to have a new one today, right? I think you're going to see Europe start to unleash their companies and say, hey, we need to be more energy independent. We cannot just rely on the rest of the world. Let's do that. I think some of the Canadian energy companies will do very well as well. So I think you want to be leaning into and buying energy globally right now.
All right, Adam, I think we've got you back. My question to you before, and I saw your lips moving, we just couldn't hear you, but have you seen anything in your research that is showing that maybe we are missing some signs that the market's underappreciating the geopolitical risk that's out there?
Yeah, I definitely think, we've had this escalation now for the last, week and a half or so, call it. I think for the most part, it's been incremental escalation so far. And I think markets right now are betting that the U.S. is not going to take a stair step on escalation from here, and really meaning troops on the ground. And if that's not going to take place, then the underlying assumption is that there has to be some type of diplomatic resolution to this conflict. I think Peter makes a great point on inventory. Inventory really helped the market withstand the initial phases of this war, going back to March and April and May. Specifically China inventory. China had a very dramatic reduction in inventory during that time, and that really helped to kind of shelter markets. So the current status quo is not tenable, for more than the next several weeks because of that inventory issue. So if we do see China even start to rebuild its stockpile of inventory, then you could say that, the risk of a further spike in oil prices is very high. But you've seen it this morning, the price of oil is down off its highs on Brent. And that's pretty encouraging with just regards to the market's ability to withstand, further next couple of weeks of this crisis.
All right. Our morning call sheet funnel is going to go from the macro to slightly more micro. The tech rotation story that's playing out right now. We've seen movements out of Mag 7 into certain other parts of the market, whether it be chips, whether it be smaller to mid-cap AI-related plays. Peter, I'll go to you for this one. Do you feel as though this is a longer-term secular story within technology, away from the mega-cap hyperscalers and more towards other parts of that AI tech play?
Yeah, I think we're starting to rethink what's going on in tech, and I'm not worried whether it's a DeepSeek moment or a Kim 3 moment. I'm worried as China trying to flood the world with cheap compute. I'm almost thinking, is this like back in the early 2000s where China just flooded us with goods, lower quality, whatever, but we wound up getting sucked into it? And I feel they've got some competitive advantages in terms of their electricity grid, Their electricity production's on par for what they need. So I'm starting to wonder, we're treating this as though it's a moment. We might rebound on some earnings, but I think longer term, there's a lot of doubt creeping into where we are in this AI story. And I think the next month or two is going to be lower from here.
Now, Adam, we didn't just kind of understand and appreciate the cheaper story coming out of China and the tech trade. We got addicted to it. Is there a feeling right now like that China DeepSeek moment version 2.0 is something that resets the entire playing field, and how do companies have to react to that?
Yeah, you're really seeing kind of a bifurcation in tech between the companies that are funding the compute build out and the companies that are benefiting from it. So the pick and shovel stocks versus the hyperscalers in the US at least. And that's really been, the theme now for the last several weeks. And it's going to be a huge topic of conversation over this earnings season, specifically on Wednesday, when Google will be the first hyperscaler to give us insight into how they plan on moving forward with CapEx spending. With regards to the China open source models, they've really been capturing a dramatic amount of market share. But again, you have a more nuanced conversation in the U.S. whereby this is negative potentially for your frontier models like OpenAI and Anthropic. But investors are still pretty confident that pick and shovel stocks will benefit regardless, because you're still going to have to put in compute to accommodate these models, whether it's open source or the closed-end frontier ones in the U.S.
All right, Ryan, I see you nodding here. Because you watch all of these setups, are there more positive setups for certain types of stocks? Which ones are they? Certain parts of that tech trade?
Well, Tom, I think what might surprise a lot of people, over the past month, the S&P 500 is virtually flat. The Mag 7 is up like 5%, right? Apple just last week hit an all-time high. It was 3 weeks ago right now, and the S&P is up 10%, middle of the year, tech up over 30%. Everyone starts calling it the Lag 7 because it was underperforming. It was lagging. As someone who's done this for a long time, when you see that sentiment, if everybody's thinking alike, somebody isn't thinking, General Patton, it felt like we went too far one way. And now you see this leadership quietly coming out of the Mag 7. It's no longer the Lag 7. I think that continues. And like Adam just pointed out, we've got some big hyperscalers coming up. This time a year ago, the 5 large hyperscalers supposed to spend about $400 billion on AI CapEx rollout. Now it's closer to $800 billion. We might talk in 2 weeks after all these earnings, and it's even higher. So that spending is still real. One person's spending is another person's revenue, is something we like to say at Carson Group. So I think you might see continued strength out of the Mag 7 here going forward, because everybody threw it away 3 weeks ago, and that's how this works.
And that's played out in the past, by the way, the discarding of the Mag 7, only to see them kind of go back up again. Let's go to our last topic, which is the drill down now into these microeconomic stories around earnings. Not the busiest week, but a very busy one, especially for Alphabet, for Tesla, for 3M, for some of the bellwethers. Peter, what are you looking for out of this earnings season?
2 weeks ago, I was pretty excited about earnings season. Right after Micron came out, right, they popped up. They seemed to save the market. They gave great guidance, right? 2-3 years worth of forward sales. It doesn't seem to have mattered. They got pulled down. So I think, yes, we might get some bounces on this. I think longer term, there's these bigger questions. Do companies go on the AI spend diet? Do we start seeing any sign that they slow spending? I think those are bigger stories, and it's going to outweigh earnings. So I'm less excited about earnings than I was 2 weeks ago.
All right, and Adam, we've just got a few seconds left here. What exactly is going to be key for you this earnings season?
Yeah, so for this week in particular, like I said, Wednesday night, I think is the most important of the week, with Google giving us perspective on hyperscaler CapEx. And then ServiceNow also, I think, is going to provide insight into whether or not IBM was suffering from company-specific issues, or it kind of spoke to a broader trend among IT budgets in Q2.
All right, and Ryan, favorite part of this earnings season so far?
So far, you have to say what the banks have said. I mean, it's just incredible, the earnings growth we've seen. But I'll say the thing I'm looking for, maybe a little different, how's the consumer doing? We've seen services improving. Manufacturing's really improved, especially last week, some of those regional ones. How's the strength of the consumer? We have American Express later this week. That'll be interesting, and watching that closely.